So now it's my pleasure to introduce Jens Beckert. He was professor of sociology at the International University of Bremen and then at the University of Göttingen before he became director of the Max Planck Institute for the Study of Societies in Cologne in 2005. It is not only his professional career, which is astonishing if one would look at his age when he got his first professorship. Even more astonishing is the fact that already with his first two major books, the notorious German Qualifikationsarbeiten, he made not only a major impact on a field, he created two. His dissertation thesis, Die Grenzen des Marktes, die sozialen Grundlagen wirtschaftlicher Effizienz, which was quickly translated into English, created the field of sociology of the market in Germany and led the then already existing American sociology of the market into new directions by simply increasing enormously the sophistication of theoretical arguments. The field was a different one after the publication of his book, who made the sociology of markets as one of the research foci when he started in Cologne. When one wants to know, empirically or theoretically, something about markets, legal or illegal markets, the Max Planck Institute is the place where you should ask first. Beckerts' second book, his Habilitation Unverdientes Vermögen, Soziologie des Erbrechts, published in 2004 and again quickly translated into English, was a comparative historical study of the political, cultural and even legal discourse on inherited wealth in Germany, France and the US in the 19th and 20th century. This book, again, was immediately breaking ground, not only by its focus at an until then under-researched topic, but also by its focus on the cultural and discursive framing of seemingly hard economic facts. And, in some sense, Beckert's most recent, although completely different book, is arguing along the same lines, that is, against the current. His Imagined Futures, fictional published at Princeton University Press in 2017 and last month in a German version at Surkamp Verlag, is again a provocation insofar as Beckert demonstrates that economic action, and thus the very basis of dynamic capitalist processes, is not based on rational decision-making, but quite often, and necessarily so, on the creation of stories, of fictions. Capitalism could not live without. Thus, I'm sure that we are getting a provocative talk. Jens, it's your turn.
What I will do is, in my talk, is indeed relate to the book that the latest book that Wolfgang referred to, Imagined Future. And the task I set for myself in my presentation for today is to relate some of the ideas that are developed in this book to Marx's famous and central theory of value. And to see how the two correspond with each other. So let me start by saying that in Marx's analysis of capitalism, the concept of value, of course, does take center stage. Already in the first chapter of Capital, Marx explains the exchange value of commodities, introduces the distinction between use value and exchange value, and develops the idea that the distinction between the two helps uncover the hidden mechanisms underlying the exploitation of labor in capitalism. In my presentation, I follow Marx in giving the concept of value a central place in the analysis of capitalism. In this, I argue for value with Marx. At the same time, I argue against the suggestion that the value of commodities represents the amount of what Marx calls abstract labor that has been expended in the production of the commodity. And in this sense, I will argue Marx. Against Marx, what has been called substance theory of value, I will claim that value in a capitalist economy is anchored in two different angles of actors' perceptions of the good or the commodity. From the investment angle, value stems from the expectations investors have of future cash flows and profits associated with the asset. From the consumer angle, value stems from what consumers perceive as functional and symbolic qualities of the goods in question. In other words, value stems from meaning. To locate value in the perceptions of market actors is to shift attention from deriving value from the production process, this was the focus of Marx, to the exchange in markets. In my presentation, I will spell out this notion of value, which stands in stark contrast to Marx's theory of value. But I will also try to show how this understanding of normative concerns of Marx's theory of value. These are, first, to understand capitalist dynamics through a theory of value. Second, to understand value not from an individualistic perspective, but as an often conflictual social relation. And third, to understand how value and enduring social inequality, exploitation, are connected, meaning to understand the normative and political dimensions of value. So let me start with Marx's labor theory of value. Marx's understanding of value has its roots in classical economic theory. To perceive the origin of value in the expansion of labor necessary to produce a product is a cornerstone of classical political economy, especially in the works of Adam Smith and David Ricardo. Marx's novel contribution to the labor theory of value was to link it to a theory of capitalist exploitation. The central intuition standing behind this is well known. Like any other commodity, labor power has an exchange. The use value of labor entails all the practical activities exercised by the laborer during the time he is employed in the work process. The commodities produced belong to the capitalist. Since the worker produces more value than is needed to reproduce his labor power, a surplus, Mehrwert, emerges that belongs to the capitalist and is transformed into profit once the commodities are sold on the market. Value thus emerges in the production process as an objective fact, independent from market exchange. Capitalist growth, but also exploitation, is linked to the potential of the laborer to produce commodities of a higher value than his own reproduction necessitates. Labor has a wealth-creating capacity that no other production factor has. Since the late 19th century, the validity of Marx's theory of value has been intensely debated. While I will not go into this long and complex, but also largely terminated debate, I think it is fair to say that ultimately, Marx fails to show that the determination of value can be explained with the exclusive reference to production. The notions of socially necessary labor time and the problem of different qualification levels of labor that Marx discusses in the first chapters of Capital show the elusiveness of his theory. In addition, the so-called transformation problem, an issue that Marx dealt with especially in the third volume of Capital, could not be resolved. Empirically, it cannot be confirmed that differences in the organic composition of capital are reflected in differing rates of profit. It has also been shown that the labor theory of value cannot explain the prices fetched for non-produced commodities like land. A further line of criticism directed at Marx's theory of value questioned its connection to exploitation. Eugen Böhm-Barwerk, as one example, argued in his critique of Marx's labor theory that workers got a fair price for their labor despite the appropriation of profits by the capitalist because of the character of labor as a future good. In response to these critiques, I maintain the stance that a theory of value is central to understanding capitalism. Unlike Marx, however, I argue that a theory of value and price needs to focus on market processes instead. The value of commodities and market prices are not simply reflections of the labor expended into the product. At the same time, I take issue with neoclassical theory. Neoclassical economics set itself off by refuting the labor theory of value entailed in classical economics. That was not so much a debate with Marx, but a debate with Ricardo and Smith, and by suggesting that the category of value be abandoned altogether. Subsequently, the focus became the explanation of market prices. Prices were said to be established in the market process, which brings supply and demand in equilibrium through flexible price adjustments based on the subjective utility of actors and the assumption of decreasing marginal utility. Neoclassical economics focused the discipline on the task of explaining relative prices in a competitive system. This focus does away with the transformation problem in Marx theory, but it also does away with the three aspects of Marx's theory of value that are of special interest from the sociological perspective. The first of these aspects is that Marx's value theory entails an explanation for capitalist growth dynamics. By contrast, neoclassical economics, with its focus on equilibrium, has had tremendous difficulties to explain growth. The second of these aspects is that for Marx, value was a social relationship. The reduction of value to individual utility addressed the social construction of preferences or wants that stand behind the demand for goods or services in markets. It also neglects to address the contestation of value, for instance in labor conflicts, which Marx investigated in detail in the historical chapters of Capital, to which Wolfgang Streeck already alluded in his presentation. The chapters on the length of the working day, the development of labor law, and on wage struggles. In the neoclassical market, it is individual monads that react to price signals based on exogenously given preferences. The third sociologically important aspect is that Marx's theory of value was directed at much more than a theory of prices. It aimed at becoming an historical theory, explaining the specificities and the evolution of capitalism. In the words of Alain Young, Marx aimed, and I quote, to unmask the anti-human character of a society in which production is entirely geared to the multiplying of exchange value, to lay bare the alienation of social life, unquote. This impetus of Marx's theory, which brings the problem of exploitation and social inequality to the fore, had its nucleus in Marx's theory of value. This is completely lost in the neoclassical approach. So pointing to these sociological motivations of Marx's theory does not lead me to champion the preservation of Marx's labor theory of value. Instead, I want to test whether it is possible to state a theory of value that enables us to maintain these yardsticks of Marx's theory, but does away with the ahistorical substantivism of Marx's understanding of value and the problems associated with it. Instead of seeing value as the reflection of a substance objectified in a commodity, and power relations of market actors, and thus on the intersubjective, imaginative, and at the same time precarious character of the creation, upkeep, and destruction of value. My starting point is to view value in capitalism largely as an expression of the perceived future-oriented qualities of goods. To develop this point, my analytical perspective starts from the demand side of markets. Under what conditions are actors willing to make a monetary sacrifice to obtain rights with regard to an object or a service? It is this willingness to sacrifice which reflects the perceived value of goods. In a nutshell, for a purchase to take place, the perceived future gain must outweigh the loss in purchasing power associated with the appropriation of the good or service. Value, at least economic value, is a category that exists. It holds for all commodities that their value derives from this perceived future performance. But a distinction must be made between investment goods and consumer goods. Investment goods can be financial assets, capital equipment, real estate, intellectual property rights, labor power, and many other product categories. What unites them is their orientation toward future income streams or profits. They are the essence of capitalist dynamics, constituting the process described by Marx in the formula money, capital, money slash. Investments always aim at profits to be realized in future market exchange, even though the investment may, as in the case of investment in capital equipment or in labor, be in commodities valued for their practical use in the production process. While much of the sociological literature on capitalization refers to financial assets, it is labor which is of special interest in the discussion of Marx's labor theory of value. Considered from the demand side, labor can be treated as an investment good with its characteristic future orientation. Employers or capitalists buy the right to use the labor of the employee for a certain time period. The value of labor power thus derives from the perceived future contribution of the employee to profit. This stands in contrast to Marx's objectivist definition of the value of labor power as being defined by the production of this labor power. In other respects, however, this conception of value of labor power corresponds closely with Marx's analysis. Marx always emphasized that labor power only has a potential to create value in the production process. Yeah, this is exactly what Wolfgang Streeck was talking about when he talked about original accumulation and the cultural issues involved and power issues, violence, involved with this. Labor must be extracted from the bearer of labor power. Marx focuses on the risk that the laborer will actually not fulfill this productive potential. This led Marx to investigate the conflicts on the shop floor between workers and capitalists over the extraction of labor. A century later, this problem has resurfaced. The extraction problem is indicative of the uncertainty of future outcomes associated with an investment. The output in the production process remains unknown in the present because of the uncontrollable contingencies stemming from the behavior of workers. The effects of this contingency, however, can go either way. While efficiency wage theories and also the Marx of capital focus on the dangers of workers underperforming, Marx had once emphasized the creative potential of labor in his early writings. Christoph Deutschmann, who is also sitting here, has stressed this side of the labor process, namely the unforeseeable creativity of labor, as the central source of profit in the capitalist economy. Labor, in this sense, is not a substance, but a potential to be realized. The employer buys this potential, and by means of organization, she tries to make sure that this potential will indeed be realized. For this to come about, employees must continually develop new imaginaries. Generally, the value of investment goods does not stem from the labor that has gone into them in the past, but rather from the expectation of the future earning power of the asset being purchased. In this sense, goods are capitalized. Their value is constituted by expectations of future returns. These expectations are calculated based on carefully determined assessments of the future. It does not matter here that the expectations of future cash flows are fictional in the sense that future events are uncertain, all that actually matters for the investment is the credibility of the imaginary of future earnings. Thinking of valuation from the perspective, is it possible to take up one of the central issues motivating Marx's labor theory of value? It allows us to understand the dynamic growth process specific to capitalism. Indeed, I would concur with the intuition of the economic historian Jonathan Levy, who recently argued that the history of capitalism should be written as a history of capitalization. Yeah, and I use the term capitalization, but that, of course, stands very close to what Wolfgang Streeck terms monetization, yeah, and would have to be discussed, I mean, how they relate to each other. The expansion of capitalism means the extension, that's exactly now this idea, the extension of objects and processes that become capitalized, meaning they become exchangeable in return for rights to future income streams and valued in accordance with this expected future income. They become an object of investment. Through these objects are commodities in the Marxian sense. The concept of capitalization goes beyond what Marx described in his notion of commodification. It captures how the capitalist process of land grabbing, yeah, also already mentioned, aims especially for a temporal extension, effectively making the colonization of the future possible. Consumer goods, by contrast, aim to satisfy practical needs, including the signaling of social status and the fulfillment of desires for transcendence. They are equally important for the dynamics of capitalism. Capitalism depends on the expansion of consumer markets for its prosperity. In the case of consumer goods, value emerges from the evocation of a connection between the good and the imagined satisfaction of such practical desires seen to become possible through its purchase. These desires are often related less to the functional properties of the goods or services than to their symbolic meanings. Yeah, and in sociology, Georg Simmel is probably the sociologist who has understood this. This value is based on the symbolic charging of objects that are used to signal social status and connect actors to transcending values. Goods can trigger such associations in several dimensions. In the temporal dimension, by connecting actors to the past or an imagined future. In the spatial dimension, by connecting actors to distant geographic places. In the social dimension, by creating connections with other actors whose closeness is desired. And in the value dimension, by signaling an affinity with espoused social values. In all four dimensions of value creation, the symbolic meaning of goods aims at transcending the here and now and allowing a goods owner to mentally associate herself with otherwise intangible things. More and more, the value of consumer goods revolves around their transcending qualities. The creation of this kind of value, especially through the instruments of marketing, is in itself an important part of the production process in contemporary capitalism. In the case of both investment and consumption goods, characteristics of an object or service, but on perceptions and meaning. Value is in this sense fictional. It is based on as-if assessments. In which sense, however, is economic value a sociological category and not a psychological, purely individualistic category referring to unmediated wants? First of all, the assessment of value is based on social interactions in which the quality of goods or services is claimed, confirmed, and contested. The basis of value is practices of valuation. Secondly, these practices of valuation are embedded in a cognitive and a moral economy of valuation. The embeddedness of value in a cognitive economy refers to the process of classification of goods. To classify goods means to put them into categories that establish distinctions and at the same time make the objects commensurable. This ranges from simple measures like weight and length to classifications according to chemical properties, such as, for instance, the distinction between different types of raw oil, or techniques for assessing damages, as in the work of Marion Foucault, who is sitting in the audience. A key aspect of the cognitive embeddedness of value in contemporary capitalism is finance models that assess the value through assumptions regarding future cash flows and risks of a financial asset. The technologies of asset pricing and capital budgeting use the notions of discounted cash flow, discount rate, or net present value to calculate the return of expected in the future. By calculating the present value of future income streams and controlling for different risk levels of an investment, these calculative tools make asset instruments of valuation is entirely future-oriented. This cognitive embeddedness is also reflected in the categorization of consumer goods according to their hipness, whether they're in or out, a phenomenon best observed in the realm of fashion. Classifications are socially established judgment devices through which the potential performance of a good is assessed. The position of goods within a classification system determines their evaluation in relation to other goods. Commensurability is possible even through the classification system, and the ranking of a specific commodity within the classification may be contested and be in flux. The cognitive embeddedness of value is dynamic. Technological progress and cultural shifts lead to recategorization and to the reassessment of the value of commodities. Value is also a social category because it is anchored in a moral economy. Commodities are not only so morally judged. This moralization of markets, term from a book by Nico Stehr, is most prominently evident when products are judged with regard to their environmental impact, their conformity to ethical standards in treating laborers, their potential health hazards to consumers or laborers, or their conformity to religious stipulations, as in the case of Islamic finance. But it is also reflected in unions demanding a just wage for their members. The intersubjective practices of valuation thus always operate from a cultural background of cognitive and moral embeddedness, which is the social backbone of the assessment of the future performance of a commodity and the economic value it stands for. Value, understood expanded into a product, prices in the market would follow value. Even if there were differences between the objective value of a commodity and market prices, for Marx, as for Smith, value was the actual gravitational center around which prices would oscillate. Likewise, modern macroeconomics assumes that prices in efficient markets reflect the fundamental value of the assets being traded. In contrast to this assumption that price and value are closely corresponding, I want to suggest that the distinction between the two is crucial to understanding both capitalist dynamics. Value and price are not the same. For one thing, prices are a market outcome in which different valuations find an aggregate expression. To put it in Durkheim's terminology, they are social facts. The valuation of a product by an individual may differ from this aggregate. A bottle of wine might have a high market price, even though I don't think highly of its performance. A stock might be, in my opinion, overvalued or undervalued. In addition, prices are embedded in an institutional and political economy that forms a market structure based on power relations and institutional configurations. Entry and exit barriers to markets, monopoly structures, and the legal regulations governing markets make up a political economy that constitutes a field of power in which prices are embedded. Market struggles, to use the Weberian term, are price struggles, and prices express the power resources of actors that determine the social power of antagonistic actor groups. Marx describes this in great historical detail in his work on the struggle over the length of the working day, which are struggles over the price for labor. My inclination is that the dynamics of capitalism and the exploitation taking place in capitalism need to be related to the ever-present perceived differences between value and price. I base this on the observation that value and actual prices motivate or discourage decisions on investment and the purchase of consumer goods, and are at the same time the breeding ground for social conflicts which are largely struggles over price. Investment and consumption purchases are based on a critique of price. Yeah, that's a notion introduced by Luc Boltanski and Arnaud Esquer recently, based on a critique of price from the perspective of value. To elaborate on this, it is helpful to return once more to the notion of cognitive and moral embeddedness of value. In financial markets, fair value is established by applying the financial models investors use. If these models indicate to an investor that there's a discrepancy between the market price and the fair value of an asset, an investment opportunity opens up, which may or may not lead to future profit. Irrespective of the actual outcome, it is the perception of an opportunity stemming from a perceived discrepancy between price and value which generates investment activity. This holds true in a much broader sense as well. The perception of any entrepreneurial opportunity can be seen as the perception of a gap between the actual market price for the purchase of necessary production factors and the perceived actual value reflected in the imagined future discounted cash flows. It is these perceptions of a discrepancy between price and future value that motivate the activities that propel capitalist dynamics. While investments are anchored in a cognitive critique of prices, political contestation makes use of a moral critique of prices. Rather than aiming to identify investment opportunities or spot risks, this critique seeks to change the political and institutional embeddedness of prices. The basis for this critique is the claim that market prices are either too high or too low to be just, that they don't reflect the actual value of the product. This critique can mostly be found in consumer markets and labor markets. Prices in low-end garment markets and also in some agricultural markets are deemed to be too low by many because their only postures is criticized as being unjustifiably high. In both cases, the critique aims at firmer regulatory standards. When the price of a sandwich at the airport is criticized for being too high, considered the sandwich's actual value, this is a moral claim against vendors' exploitation of a monopoly situation faced by air travelers. Labor conflicts are fueled by the moral claims of workers and their unions that the price being paid for labor does not reflect its actual value. It is again the discrepancy between value and price which motivates action. The moral question brings us back full circle to the heart of Marx's labor theory of value. For Marx, the labor theory of value also forms the basis for a moral critique of prices. Workers, as Marx implies, ought to be paid not just the market price of their labor power, but should receive the monetary equivalent of the value they produce in the production process. In this sense, Marx's notion of exploitation is anchored in an Aristotelian notion of just price. For Marx, it was clear that this normative ideal was irreconcilable with the operation of capitalism and could only be achieved with new relations of production. But the conflicts over labor time, factory regulation, and wages described by Marx emerge from this moral critique of the price for labor. Even though Marx himself was a nation of the price for labor power. This contrasts starkly with the understanding of value as the basis for a critique of prices that I have developed here, which claims that the discrepancy between the exchange value of labor and its use value, to use Marx's terms, is contingent and is shaped in the political and social struggles between antagonistic groups that operate within institutional, moral, and cognitive boundaries. The price of labor is not a mechanical reflection of the objective costs of the reproduction of labor power. Prices are the outcome of practices that take the form of market struggles. But in keeping with Marx, the difference between the price for labor and wealth creation through labor, or between price and value, is the normative yardstick upon which actors can base assessments of injustice or exploitation. Let me conclude. Marx and the classical political economist's idea of value being the expression of the abstract labor expanded into the product is indefensible. As an alternative, I have presented an understanding of value which focuses on the intersubjective perception of the future potential of a commodity. In the case of investments, these perceptions refer to expected profits. In the case of consumption, they refer to the anticipated satisfaction of functional and social needs through the purchase of a certain product. Such an understanding of value avoids crucial problems that Marx's labor theory of value encounters. It helps explain the fluctuation of value and prices. Expectations regarding commodities are contingent and can change. Products can be valued differently by different actors at different times or in different locations, regardless of the amount of abstract labor they contain. In addition, if we focus on the expectations in order to explain value, it becomes possible to understand the economic value of objects that have not been produced, of which land is the most important example. Finally, in contrast to Marx and also to modern economics, I maintain that one needs to make a sharp distinction between value and price. In all these dimensions, I propose a conceptualization of value without Marx. At the same time, however, I believe that Marx's labor theory of value contains crucial analytical and normative motivations that are valuable for the analysis of capitalism, at least if it is to claim sociological relevance. A theory of value should stand front and center in explaining capitalist dynamics. It should lead to an understanding of valuation as a social process, and it should be a starting point for a normative critique of the social inequalities produced by a capitalist economy. In this sense, my consideration aim at value with Marx. Thank you.
So thank you very much, Jens. The last time the questions were brilliant, but not short enough, and the answers as well. So again, we aim high in this respect. So, Herr Deutschmann. And wait for the microphone.
Thank you very much for this really brilliant presentation. I would agree, I think everybody would agree with your critique of Marx's substantivist theory of value. I think the basic implication of this critique is that it is not possible to say something about values from the position of a so-called objective scientific observer, independent from time and space, as not only Marx but also Ricardo and Smith believed. There is no possible ahistorical observer who can determine quantities of value, but the only possibility which we have is taking the perspective of a historical participant. And the possibility of contextualized analysis of values, which reconstructs the expectations and the perceptions of historical actors. Nevertheless, I wonder if Marx's own analysis in all points is really so much different. Have presented here. I think at least there are 2 points where Marx himself seems to have at least a little bit in the same direction as you yourself pointed. The one point is qualification. At the end of the 5th chapter of the first volume, Marx discusses the possibility of that there might be a difference between simple and complex labor, qualified and simple labor, and that complex qualified labor might produce higher amounts of value than simple value. Then this, at least, he seems to have considered the possibility of labor being treated as an investment, as you did. And the second point is consumption, the influence of reluctantly he had to accept in the second chapter of Capital that market demand too has an influence. The market has to swallow the products. Otherwise, they could not reclaim any value. So the market demand has an influence on, without elaborating this point further. So perhaps Marx's own position is not so unambiguous as you said.
You at least must put 2 questions together. Sascha Munich.
Yes,
no, wait for the microphone, please.
Yeah, thank you. My question concerns this changing over of the exploitation issue. I mean, if I follow your argumentation, then this means that this value difference that capitalists live from is defined by market relations to a large degree. Does this mean that we could understand capitalism not as economy in which the labor process is exploited, but also like the consumer is exploited in a way in markets, and so you can basically pay your laborers a higher wage, but in the end you will get it back because you can, work with the social valuations that going into market with exploitation. That's my question.
Okay. Yeah. Briefly, maybe, Christoph. I think I would follow you, and I mean, Marx works so much better than me. There are, I mean, in Marx, so many ambiguities. Yeah, and so you can, I think, always make arguments which say, but there is this, paragraph or footnote which somehow adds this. Yeah. My attempt was to, in a way, start from the main thread of Marx theory. Yeah. And then make it not an exercise in you see, internal debate within the Marx oeuvre, but see where this main thread is actually problematic and where an alternative needs to be stated much clearer than what might be somewhere hidden in Marx, partly at least in Marx's work himself. Now, the question that Sascha asked is an interesting one, and I must say I don't have an answer to it. But I think here, to just hint at the direction of an answer, one needs to see, that Marx's analysis of capitalism, of course, takes place in a specific period of capitalism. Yeah, where, actually most of the society that Marx observed was still a traditional society. Yeah, observed. Yeah, when looking empirically at England, and the manufacturing, in the factory there, then he had in mind, clearly, the industrial worker, and the labor process there. Yeah. Now, if we look at contemporary capitalism, then of course there are many facets, of it. which are much more prominent, yeah, which maybe in Nutz, they may have been there already in Marx, which are much more prominent today, which don't lend themselves, yeah, to an explanation which only looks at industrial labor and the processes of exploitation there. Yeah? So consumption would be only one example. The whole process of financialization about which we talk. Or think of, I mean, models of profit making like Facebook. Yeah, and these kind of network economies. Yeah, and here I would say that, I mean, neither profit nor exploitation, yeah, can exclusively be traced back to the labor process. Yeah, but how exactly one reconciles this? Yeah, I don't know.
Okay, next one, Dave Elderweth, and then Herr Niesen.
Thank you for a marvellous paper. I enjoyed that a lot and agreed with almost everything. But I wondered if I could suggest a kind of small addition to the argument and a small question that arises from it. And the addition to the argument is this, that if we discard the idea that the value of something is the amount of labour that's embodied in it, and go on to talk about how value is determined, it seems like we've missed out a step, which is to say, well, what is value? What do we mean by value if we've discarded that idea? I think there's a simple answer to that, and I think the answer is that the value of something is the price that we think it ought to exchange at. And if we take that as a reasonable point, then I think we can question the argument that there's no divergence between price and value in neoclassical economics, because it seems to me that neoclassical economics is a theory of equilibrium price and not of actual price, and that implicit in neoclassical economics is the belief that the equilibrium price of a commodity is the price it ought to exchange at, and therefore they have a theory of value, even though they don't call it that. And I wondered what your view would be on those points.
And Niesen?
I was struck by the centrality of the notion of a right in your analysis, and I just want to ask whether I got
Sorry, the notion of?
A right, R-I-G-H-T, and I wonder if I got this right. So you were saying that value is a right to envision future market exchanges, or that exchange give rights to future incomes. And I wonder what you mean by that. Is that some defeasible moral claim that you're talking about, or is it an all things considered claim, or is it a legal political claim that should be enforced by the political regime? I mean, a lot of the questions you were talking about later, the legitimacy of regulation, seems to depend on how you understand the notion of a right in this central part of the analysis.
Okay. So, Dave, that is interesting. I would follow it largely, but want to nevertheless comment. So, to say that value is what a product ought to exchange for. Yeah. So this is exactly this normative point. I fully agree. And prices can differ. Market prices can differ from this. Yeah. Now I would also say, yeah, that in neoclassical economics, the equilibrium price is also a normative, has a normative dimension. It is indeed the price for which things should exchange, because this is where, I mean, the optimal production of welfare takes place. But this understanding, normative understanding, yeah, is not necessarily the normative understanding of price that prevails, yeah, in society. Yeah, and so I mean, and as an economic reality, yeah, political contestation is based on the fact that, I mean, let's talk about workers. They not simply say we are content because that's the equilibrium price, yeah, but they derive their moral standards, yeah, not from economic theory. Yeah, at least sometimes they don't. And so there's the difference where I see now with regard to rights. I mean, it may very well be that there is in some parts of the paper I have to look at it as sloppy use of this. But let me say what I mean. There is. I mean, I use the word right on the one hand in a normative sense. Workers believe they have a right to a certain remuneration of their work. Now, the example you brought, a right to future income, this is actually, that would be a sloppy use of language here. What I mean here is that they have an expectation, with regard to future income streams.
So we have 5 minutes left and 3 on the list. Wolfgang Streeck, lady behind, and Axel Paul.
Can I see without this machine?
No.
No, just a very short remark against to underline how value creation has become dissociated from the labor process. And in fact, your model, if you, for example, take the creation of money, we still have this idea that someone sort of extracts a profit from work, from a labor process, and then invests it in a bank, which sort of then extends credit to someone else. But the way credit is produced, there's nothing to do anymore with this. It's sort of out of thin air. And why? Based on expectations that someone later will be able to service the debt that I now create by giving him credit. Right? That's a totally different world. And the labor process sort of follows after enough credit has been created for the labor process to be pre-financed, so to speak.
Schumpeter.
Yes, thank you for this fascinating rehabilitation of value theory. I have just a question. You pointed to the ambiguity of Marx thinking.
Sorry, to the
ambiguity.
Yeah. Okay. Yeah.
But in one point, he seems to be quite straight to establish a theory that founded exploitation based on scientific work. So he rejected the debate on just wage. He rejected the notion of exploitation based on normative evaluation. So would you agree that with your concept, actually exploitation is a normative concept based on moral economy and expectations, social expectations?
Axel Paul, and then we have to close.
Thank you, Jens. Fantastic presentation. I nearly completely agree, but I have to suggest a complication, or two complications. One simple. First, we can talk about economic value, and that's in a way an answer to your question, I assume, only if there are property rights. So property rights have to be legally established and enforced. Otherwise, no market exchanges are possible. Otherwise, no money economy would be able to establish itself. Secondly, what Marx discovered in the first chapters of Capital is that value is not only embedded in cognitive processes, but there is something what he called form of value. And this form, the assumption that there is something which is common to different goods, is a cognitive operation that comes first, because before we start to classify objects into different categories, before we struggle about the moral boundaries of the market, etc., etc. And again, this seems to me a legal operation. A legal operation because the assumption that different deeds or objects can be measured in something which does not really exist, but which on the other hand, can be objectified in money, is something which we can observe in history, in legal practices first. And I would suggest that a value theory starts even earlier than you do in reconstructing the birth of the category, of the form of value.
Okay.
Short answer.
Okay. Very interesting. I have to say, that market exchange is basically the exchange of property rights here that I mentioned at the beginning, that I fully agree. The second point I think is very interesting. I would have to think more about it before, and see how this can be integrated here. So let me just briefly respond to you. Yes, Marx, of course, understood his work in this with this scientific, and that's also part of the 19th century, of course, and the kind of positivism, that is characteristic for this time. But and of course, he took great efforts to say that what he writes about value is not a normative concept, but is just a scientific concept. But nevertheless, I think one cannot understand Marx's work and also the theory of value without the deep normative impetus which stands behind it, and that is really that there is a profound injustice, in the compensation of workers, even though on the formal side it seems to be completely just, and so this I wanted to bring to the foreground.
Okay, thank you very much, Jens. So we don't have a break, actually. We immediately continue. Otherwise, we are running into troubles. Yes, maybe open the windows. Okay. Oh, in PowerPoint, oder? Ja, genau. Okay.